Afternoon all, how are we all doing? Afternoon Robert, check. Comfortably Crumbs Road, who has many names. Soul Trader, Virginia, how are we doing? Hello campers. Oops, I meant traders. Say no more. Basically, nothing much has happened this morning. We've had some big moves on the New Zealand dollar. Morning, Fletch. And we've had Trump saying a few bits and pieces and Lutnick, but nothing particularly exciting so far. No news today. Again, it's no news day. We have got home sales at 3 o'clock. Doesn't tend to do an awful lot. So yeah, bit of a crap week so far this week for news and events. Tomorrow is the big day. We've got the PMIs tomorrow and interest rate for the euro. So tomorrow will be potentially a big market mover. But the main mover today, as you'll see from the New Zealand dollar, is the New Zealand dollar. So big moves there. New Zealand CAD up 125 ADR, 200 ADR, New Zealand Swiss, New Zealand Yen ADR. So big moves to 125 on New Zealand US. There was a bit of a gap down candle, but even so, very big moves on those this morning. As you can see, there's a lot of movement everywhere. The Australian dollar's been on the move as well. So yeah, fair bit of movement in the Australasian market. So commodities are getting a decent amount of movement. RSI extensions, same. All the hourlies are extended. Aussie dollar CAD. So big move up there. We're up to 70. You've got three alerts at 75. So these are getting close to nice entries. Look at that, beautiful. Aussie US 15-minute reversal alert just about to trigger. So that looks like a very good short about to trigger there. Aussie US, we are at ADR. And we are also extended on the hourly up there. 4 hourly also up there as well. So that's a good short opportunity. Aussie US. Euro CAD also very nicely extended. Sorry, Euro odd, not Euro CAD. Very nicely extended to the downside. So long opportunity there. 5-minute reversal alert is just gone in. Very, very tight as well. So nice reversal alert there. Didn't even get back and retest. Well, it did. Came back and retested the propulsion gap. Didn't retest the reversal, but it retested the order. So nice looking long opportunity there as well. So quite a few opportunities, as you can see, sort of setting up. Euro New Zealand is also another good one, but these are all because of the New Zealand move and Aussie moves. So look for support at these areas. So, you know, much better off taking it at a decent weekly support if you can find one as well. Afternoon, Ryan, Michael, Mayor, it's time. How are we doing? Michael wanted to look at something today, which was what that is. Euro New Zealand. Ah, there we go. We're on it. Where would you put TP in this case? I have 6 positions on and did take some TP already. So Euro New Zealand. Well, if you're short, I mean, you want to be looking at support areas. So here and here. But I mean, this is the most obvious. We ground up here very, very slowly. And then we kind of picked up momentum there and took off. So this area here where this propulsion gap is, which we retested with that weekly low from 2 weeks ago, that is probably your best TP to the downside. But obviously this big old propulsion gap all the way down here at a monthly high is also a very good area to target. So you got a monthly range here, which we attempted to break out and then actually succeeded. They haven't come down and retested this propulsion move yet. So if it's going to break to the downside, that would be a good target. But bear in mind, tomorrow we've got the euro rate. Now, Lagarde is expected not to change the rates tomorrow. We're looking at 2.15. It's very rare we don't get a forecast. So it would be unusual not to get 2.15. So the market will have already factored that in. So the main thing you want to focus on is what Lagarde says in the press conference, which is at 1:45. That will potentially drive this Euro New Zealand somewhere. But a lot of money coming into the New Zealand dollar and the Australian dollar at the moment. So could easily get down there. If Lagarde is bearish, i.e. we're going to drop interest rates below 2% in the next quarter, you're going to come down on the euro. If you've got 6 positions on it, it depends where your positions are from and where your average is. But that is, I mean, if you scaled in from here, didn't get out on that, and you were scaling in and you didn't get out on that, and you're still in it, your average is probably somewhere around here. That would be an obvious exit down there. But we'll see. We'll see what happens with Lagarde tomorrow. Afternoon, Brian Plowman, Pleiades. How are we doing? So let's look at the indices. So indices, strong move to the downside at the open on the S&P and the NASDAQ. Very big move on the NASDAQ. Look at that. That's nearly 40% of ADR done there in one 5-minute candle. That's a lot of volume. I'm having one of those mornings today. I've been programming all morning, so it really tires me out. So big move there. Wonder how many of you just yawned then. Did I pass the yawn on? 800 on 777 on the S&P. So that's a nice looking size of range there. Very big one there. Dow, pretty good as well. So going to take a break of the 5-minute ranges on the on all three today. See where we go. There was no trades this morning on the DAX. So the DAX range basically this morning, the candle closed right at the low and then gapped down. So there was no trade there. We just didn't get a range today that was working. So finally got that 10-minute range in, and it was over 40% of ADR. So this is absolutely typical, this one today. When the reason we have this rule here for a maximum range at the open is when you do 40% of or more of the average daily range within the first 5 to 15 minutes, the market tends to lose momentum. That's exactly what we got today. So that's why that rule is there. This is the typical price action after a move of that size. So no trade on the DAX today. FTSE, we did get one long. Again, it was a big range today, just shy of 40%. So pretty much it was 40%. And again, as you can see, there's no momentum. The market finds it very hard. If you get a huge volume of orders right in that very first 15 minutes, the market finds it very hard to get any continuation momentum. You will also find it very hard to get a positive risk reward ratio out of it as well. So it just doesn't make sense to trade it. But this one was just shy. So the EA did take the long, stopped out, gone nowhere. So there's a potential short on the FTSE still. It's going up at the open. But so yeah, just one trade today. Yesterday was beautiful. Yesterday did 3.6. Just clean breaks everywhere yesterday. So one losing day so far in the last sort of 2 to 3 weeks. Market's on fire at the minute. But today we seem to be inside bars. So inside bar 10 minutes. Same on the NASDAQ. Same on the Dow. So no breaks at all. 4 minutes left on these candles. There we go. We're off. So big sell order just came in there. Looks like we're going to break short on the Dow. Probably going to break short on the S&P as well. Nope. Put him back. Oh, that was close. Nearly triggered the Dow. A lot of volume coming in. Trump is talking at the moment. There we go. So short Dow, short S&P. Trump is talking at the moment, so we've got potential. Here we go. I will only lower tariffs if a country agrees to open its market. If not, much higher tariffs. Here we go. So yeah, we had all this Trump talk, which was coming out in the last half an hour. He's been talking away. This here is very threatening. Again, large nations are going to have a hard time getting a lower rate. Assumption. Large nations give a monkeys, don't care. We're not going to do trade with you at those rates. Therefore, who loses? You do. So very assumptive that we have to rely on the US. We don't have to rely on the US. The rest of the world can trade with other partners, can do business elsewhere. quite happily. So, you know, all this talk is basically, you know, you're going to get around the table and talk to us. No, we're not. We're going to go elsewhere. We'll deal with Canada. We'll deal with all the others. You know, so it's very threatening talk, and this is one of the reasons we're seeing this massive decline in the US dollar. You know, you can't go on like this. It's not going to help. That's the direction we're going if you keep these tariffs where they are, unfortunately, because, you know, it isn't the be all and end all. But we'll see. So there's more threatening tariffs coming in from Trump so far this morning, it seems. But anyway, we'll see what happens. So obviously, if the dollar reacts, the indices will react as well. So today, at the moment, we've got this earnings fortnight, or rather 3 weeks as it is now, going on. So today's earnings are AT&T, CME, GE Vernova, pre-market, TFS. We've got Google aftermarket today. So when we get to kind of end of close of session today, basically, we're going to get the numbers for IBM, Tesla, and Google. So potentially we're going to get some very strong moves. Kind of comes usually in the last 5 minutes. They're meant to release these after market, but what tends to happen is they get leaked. You get some market participants jumping in just before the close. So be prepared for some big candles to come in just before close. If not, we will be getting them in the Globex session. So potential big moves. We've got Intel tomorrow as well, and Blackstone as well. So there is some movement there. Next week is a lot of the other big names like Apple and Amazon, Cloudflare, all that lot as well. So we'll see. But looking at the indices at the moment, obviously we are at all-time highs. We've just put in a new all-time high today at the open. So again, all-time highs going in, but market, as you can see, we attempted an all-time high. We got the all-time high. It pulled straight back within. And then yesterday, we kind of had this sideways day. Globex has ground up into the all-time high. And at the moment, we're rejecting it. So it looks like we're stalling here and stuttering and can't actually get any progress. NASDAQ, as you can see from yesterday, this is why I had a lovely day yesterday, just collapsed straight down. So that's yesterday's low. So if we do break short today, obviously partials at yesterday's low is a good idea. But again, all-time highs failed. Yeah. So obviously we've got earnings out at the moment. So it does make it very tricky with earnings because obviously you do get short-term movement. And obviously if it is somebody that's in the top 10% of the index, you're going to get a lot more movement than everybody else. So it can be very hit and miss and whippy. But the Dow, we're not out at all-time highs on the Dow. That's much further up. So this purple line up there, you can't see it now. That's your all-time high up there. So we're not there yet on the Dow. So there is more upside room there for that one, but I don't think it'll go up today if the rest are going down. So we'll see where we go. So at the moment, market looking like it wants to break short. As on the S&P, we have gone already. So interim targets today. Speed, that's coming down. I think I'll just leave it where it is. Obviously, you want to be watching this level here, which is a previous weekly high. You've got the high there from yesterday. So if you look at where we are levels wise, this is last week's high. That is yesterday's high. So obviously that is a resistance to the upside. We kind of tapped into it the day before as well on Monday. So this is a strong resistance. Resistance turns into, was a strong resistance. Resistance turns into support. So just watch that for a bounce out of there. In fact, it might actually be worth moving my partial up on the S&P. NASDAQ downside is the low. So this level here is, that's an old 2-week high. That's yesterday's low. So taking partials sort of around about yesterday's low is not a bad idea. There's a good chance we can actually put in a new low today as well. And Dow Jones struggling to break down the Dow. So that's yesterday's high. This is the previous day's high. You can see we've reacted off the previous day's high a few times today in Globex. So there's a potential reaction point there as well. But I'm going to leave it in that propulsion gap for the minute. See if we break down. Kind of eager to take partials at the moment. Just to try and keep the P&L green, basically. Just for a vanity perspective. Afternoon, David. How are we doing? So that US dollar CAD on the 4 hour really extended down at the 14 level. That's spiking back up now. So this propulsion gap here potentially could well be a very strong sell zone. So be a little careful trying to mean revert this in case. Obviously, Trump's talking and he could well talk that dollar down. Nothing else has come out since 237. So he might have finished. So record-breaking stock run gained new momentum after dollar reached trade agreement with Japan. Investors quickly turned their attention to earnings from tech behemoths, and obviously then we fell back down again. So obviously the Japan deal going in is important. Japan have agreed $500 billion investment back in the US. We covered this in this morning's live room. Obviously what the Japanese did was in the past they bought bonds in the dollar, which is why it was very weak, because all of their investment was overseas, which meant that the currency weakened because there was no internal economics or internal growth through commerce, because they were dealing mostly with the US. They decided to pull all of that, which is where the intervention happened. Yeah. And since then, we've held. So basically what they did yesterday or overnight is they have agreed again to start dealing more with the dollar, which means it will weaken the yen, potentially. However, the Japanese are now controlling interest rates with inflation, or rather controlling inflation with interest rates, the other way around. So whether or not this goes back into an uptrend, we'll have to wait and see. But obviously, they needed to do a deal because the vast majority of their export is with the US. So deal had to be done. So it favors the US, but I think it also favors Japan as well. So we'll see what happens with the yen. I think it's going to become a much more normal currency now, the yen, and more easy to trade, basically. NASDAQ is holding up. Dow Jones has broken short, S&P short. So that is the stop on NAS. So if we get a pullback on this now into propulsion, I'll stop out on the NASDAQ. It might be like yesterday where we just, or the other day, where we just go parabolic and it just doesn't stop for half an hour. We've had some big days like that recently, haven't we? See where we go. If anybody's got any FX pairs they want to look at specifically, let me know. But obviously the ADRs today, there's loads, absolutely loads, mainly Australasian. Swiss yen has hit ADR again today as well, to the downside. So strength in the yen coming through there. The euro yen as well. Yen, strength in the yen. And pound yen, obviously all the yens basically. So strong yen on the back of the trade deal, basically. So I think with all of these today, they're all good mean reversion opportunities. I'm not quite sure why we've got so much strength in the Australasian pairs today. I couldn't find any news, but these are all great mean reversion opportunities. Got a lovely weekly low here that we've reacted at multiple times. Yeah, we've got this weekly high from last week, and we're extended beyond ADR and extended on RSI. So lovely short, interim short, just small, short-term scalp type thing. There's your reversal alert gone in and the retest. So we're looking at M pattern pullback. So target to the downside quite easily could be that propulsion move there. I suppose it did break that high, didn't it? Yeah. So, I mean, that's not a bad propulsion gap to target. They've added into it. So pushing up into that high potentially. So good pullback opportunity. There's loads of these which are really good opportunities today, but that's the most extended. But that's really because of this candle. So, and obviously all of these RSIs are good opportunities. Aussie US particularly on the 4 hour. That's a beautiful level. Look at this high. Yeah. So 3-week high rejection, 2-week high, 1-week high. We're back. Yeah, and we've made new lower lows. So you've got an expanding wedge pattern, which is bearish, coming back down to retest that source. So that is really good. But we're going to need a strong US dollar to get there. And obviously, Mr. Mouth Horn, for a better word, is obviously talking a lot at the moment. So there's potential for that dollar to either strengthen dramatically or weaken dramatically as well. So, with everything at the minute, you are in Trump's hands, but that looks technically very, very good. Technical, perfect short, absolutely perfect short. Reversal that's gone in on the 15-minute. I kind of like it. You got resistance coming up here. It's not far away. So 175 ADR is that downside resistance. And then that is your most recent upside resistance, which is about 250 ADR. So if you short this and it doesn't work out, you've got 2 scale-ins there, which will bring your average into here. And if it's gone parabolic like that, you're going to look for a 50% retracement to make the money. So it's good for a short. It's on the 4-hour chart. So at the moment, price action, you're painting on the 4-hour chart an inside bar. Look at that lovely rejection up at the highs. Inside bar, so a break of that or that is an option. That will be an hourly reversal alert. What's that? 65616. All the way down there. So, 30-minute, 15, you just had the reversal alert on. 30-minute, you're about to get the reversal alert in 6 minutes' time. That's going to trigger a reverse alert short. Five you've already had. I've got so much exposure on the Aussie short, on the Aussie New Zealand. I can't really take that myself. I've just got too much exposure short on the Australian dollar at the minute, but I would. If I wasn't in any Aussie short, I'd take that. That's good. Nice extensions on hourly and 4 hourly. And obviously it's an ADR hit today as well. So everything lined up. Okay. So NASDAQ is holding inside range at the minute. Just about made a new low on the S&P. Very convincing on the Dow. OG, Euro US dollar. I mean, difficult that. Signal was yesterday. You did also have a signal there on Monday. So you've got divergence. It's not really actually, it's a slight uptick. So sort of very weak divergence, which is obviously a bearish signal. Market structure is long, as long as that dollar is weak. Now, Lagarde tomorrow is going to basically tell us what the euro's fate is in the next quarter. So there's a good chance we might get some weakness in the euro, but we might also get some strength. If she comes out tomorrow and says, we're going to hold interest rates for the next 3 months, data is showing that inflation is sticky and starting to rise, the euro will be bullish. or maybe neutral. It's difficult to tell with the euro, but the US dollar specifically, obviously, at the moment is very weak. So, yeah, but pullbacks into here for longs would be good. And if you wanted to short that, obviously down into there, that would be good. Difficult to tell with the euro US dollar. As you know, again, Trump all the time. Trump is doing what he does. There's no reason it won't be doing that for the foreseeable. All the time he's holding tariffs over everybody. All the time he has not got a deal in place with Europe. That's going to happen. The dollar's going to weaken. As soon as he gets that euro deal in, I think we will start to see some strength coming through, because that's the last real tricky one, the Eurozone deal, which he hasn't got done yet. And the Europeans are really not interested. New Zealand dollar CAD 150. Inside range. We covered this in the live room this morning in the members stream. Yeah, so going back up to here. This resistance here potentially could be a bounce point. Nicely extended on the hourly. Good looking short. Euro odd, Euro CAD. Quick look at where we're doing the indices. Just going to take a partial on the S&P. Just worried about this NASDAQ. We're rejecting the downside on the NAS at the moment. We're also rejecting on the DOW now. So, we've got a lot of buyers holding price at the minute for the last 10 minutes. So I just don't want this to come flying back. I might as well take partial, at least make a dent on that loss from this morning. Does look like it's starting to go now, the NASDAQ, but it's struggling. The Dow is definitely struggling. So Dow rejecting that weekly high. That's last week's high. We've used as resistance today. We finally managed to get through it in the Globex session, and this is the first retest. So this could be the bounce point today for the Dow, and if that is the case, that will prop up potentially the other indices. Though NASDAQ is certainly not getting propped, is it? Tempted just to shut this all out, to be honest. So partial taken on the S&P. Now we're off. Okay, so Dow is testing propulsion. Looking for the sellers to add into their shorts there. Looking for market structure, continuation short. And on the NASDAQ, this is not a very good propulsion gap, because it's just part of the profit take move of that. It's not breaking any highs. It's not a move up. It's just an undoing of yesterday's profit take. So we have tested it already. I don't think that's necessarily going to hold. We'll see. Might do. So Euro odd, we're just kind of coming down into support at the moment. So this area here obviously is a previous monthly. Very nicely extended on the RSI and the hourly. You're an ADR extension to the downside. No reason not to go long on that at all. You kind of missed it though. That was your reversal alert back here. 15-minute reversal alert was a little later. In fact, that just went in 15 minutes ago. So there's your reversal alert on the 15. So you can either take it now or wait for a retest. Watch that low from yesterday, which is that previous support. Turned into resistance. So that's your upside resistance. Euro CAD. I've got shorts on this. Just stuck on this. It's just not going anywhere, is it? Can't get out, basically. Scaled in and literally in 2 weeks now, nearly 3 weeks. So that's your 3-week high. That's your low for the last 3 weeks. We're just sitting here doing this. So can't get out of it at the minute. So I'm short. I'm looking for these propulsion gaps to get tested. I'm getting out of some of it on the way down, but I just want out of it now, really. It's just stuck, stalled. Hopefully Lagarde tomorrow will drive that back down again. Plan. Aussie yen partnership. Well, they are Asian session. So from a banking perspective, a lot of money goes through that area altogether. But I mean, the world works in sectors. If the European zone is doing well, the Swiss franc will do well, the pound will do well, the euro do well. If the US is doing well, Canada does well. If Australia is doing well, New Zealand will do well. Japan is kind of in the Asian zone. So, but then nothing to do with the commodities market, which is Australian dollar, New Zealand dollar, and Canadian dollar. So they're not really linked. But everything is linked, because it's constant trade. So I don't necessarily think the Aussie and the yen are moving. I don't think the Aussie pairs are moving because of the Japanese yen getting that deal. You never know. We haven't got any Australasian news. We've got Bullock speaking tomorrow. I'm just wondering if they know something about tomorrow. There could be something coming out there that's going to move the market. We've got CPI for the Aussie next week. Pretty much it. So yeah, there's no real reason for this. It's a commodity run, basically. Right, so the weekly level's holding on the Dow at the minute. Still in propulsion testing, still bullish. Indecision on the NASDAQ, indecision on the S&P. Not sure what to do today. This is that kind of price action, especially on the NASDAQ, where you just see every bull run hammered. Every bull run hammered. And it's just one of those days where you can just see it collapsing, disappearing away. But the Dow's holding up, which is what's worrying me slightly. I just got money on the table. I don't know whether to take it or not. This move here that we're sitting in at the moment, this propulsion gap, this literally is a big profit takeoff of yesterday's drop. Not buyers suddenly stepping in going, oh, we need to buy the NASDAQ. It's a profit take. So I don't think this necessarily is going to hold. Question is, what's Tesla and Alphabet going to be like this afternoon? Later. Okay, so we're pulling back. Shorts. I'm sitting behind that propulsion gap as well. So Dow is trying to break back up. It's just a little bit of a profit take move on the leg so far. So hard to be convinced on longs at these highs. Yeah. At the end of the day, at the minute, it doesn't matter what you believe about the stock markets. Trump will open his mouth and change it. So it's one false word and the stock markets will collapse. The market is so jittery at the minute. They are just so on edge. I know we're sitting in greed mode at the moment. So the fear and greed index is like extreme greed, which is massively bullish. But the only reason it's sitting at extreme greed is because we're making all-time highs. The market's actually scared to death because every time we make a new high, you've got the opportunity for Trump to come out and blow it. Actually, we've moved down into greed yesterday. So we were up here. So, you know, the market is starting to think, not too sure. Everybody's buying crypto, obviously, because it's made all-time highs. I saw a brilliant meme about Ethereum earlier. There's a queue of people. There's a window saying Ethereum, and I can't remember what the price was, 1,300 or something. And then there was another window next to it with Ethereum at 4,500 or whatever it's trading at. I don't know what it is. But there was like 5 people queued up here at that window and about 500 people queued up here. And it's like, that is the absolute definition of retail trading mentality, isn't it? Let's wait for it to do the move and then let's buy it just before it collapses. What's happening? Everyone's going, see, told you, all-time highs, all-time highs, all-time highs. Every time it makes an all-time high, it collapses. So everyone's buying it now. Crypto. Start building shorts. But same with the stock indices. That was my point about talking about crypto. But it's exactly the same with stock indices. Yeah, when you get to all-time highs, you stall. Yeah, it's very hard for the market to hold all-time high levels because you see there's one there attempt. That was when we went into a bear market, but that high there, see, we broke it ever so slightly and then we dropped back down again. So everything from this line onwards is all-time highs. Stop drawing lines. So you see here, we hit it, rejected very hard, very, very, very strong rejection at the all-time high. We broke it and then we collapsed. Then we pushed through it and we just about managed to, and then we collapsed for a week. Then we had another crack at it and then we collapsed again. Then we broke through considerably, and that's when your bull run starts. Yeah. And then you just grind into new all-time high territories. But at some point, they will remove 50% of that move. This is why the market tends to get scared. At some point, we're going to pull back into the 2472. Yeah, we always do. Bang, bang. All-time high, bang. All-time high, bang. All-time high, bang. Yeah, Trump. But you know, when you get a run, couple of months max. You know, we are now, especially with the S&P, we're nearly a month in. It's getting ready for a correction, isn't it? Especially with what Trump's doing at the moment. You know, it's very hard buying all-time highs. Always is. Dow is back inside range. The NASDAQ, we are still holding short, but we have made a higher high and a higher low. So that is definitely bullish. 3-bar reversal on the S&P. So definite strong bull move on the S&P going in at the moment. So watch for a pullback into this area here for shorts. May just flag and disappear, but that's where you'll find sellers if we are going to sell off today. If not, this could be just a false break to the downside and we're going to fly back up again. David, quick question specifically for your trades like the Euro CAD, which has taken a while. How come you don't take trades in the opposite when the RSI extends the other way? Because I'm short. That's hedging. I don't do hedging. So if I long that here, I'm just going to hedge myself. If I long that, I'm just going to hedge myself. Yes, they may work, but if they don't, so let's say, for example, this RSI extension just went like that. All I'm doing is going to take my shorts off, and now I'm stuck in a load of longs, which I've got to get out of. that's an always-in strategy. So, there's nothing wrong with it if you want to trade that way, but that's not what I do. My position trading strategy is once I'm in a position, in a direction. You could hedge it if you wanted to. There's nothing wrong with it. We've got hedging strategies for the market reversal alert CA and for the position trader EA, which will do that. In the position trader EA, you've got the hedge settings down here somewhere. Hedge mode. Allow multi-direction trading, hedging. If you set that to true, it would have taken a long. And you would be out of that long with one position. Yeah, if you want to. But that's not what I do. It's, that's kind of what the banks and institutions do. But what they do is they will close everything and flip. So they flip rather than hedge. They hedge multi-symbols. Banks and institutions don't hedge individual currency pairs. This is what most people think hedging is taking trades in both directions on the same instrument. That's not commercial hedging. That's retail strategy learned on YouTube hedging. That's not what they do. So you can do it, and there's nothing wrong with it. It will either work or it won't. If it doesn't, you're going to scale in and wait for a pullback. Try it. Go and use the position trader EA in the backtester. Put hedging mode on. So allow multi-direction trading. And yeah, go test some hedging strategies out. You've got a multi-trade long and short combined target there. So if you set that to 1 ADR, it will try to get a profit when both of those trades are in 1 ADR. But if you set it on single direction to 1 ADR, it will take profit on your individual positions in one direction at 1 ADR as well. So depending on whether you're targeting money or you're targeting ADR distance, you'd want them both set up depending which one you're using, but test it. There's nothing wrong with it. But just what I do. Start chanting all-time lows, all-time lows, all-time lows. How's that going to happen? All-time lows is a long way away. Oh, can you imagine going to all-time lows? How far would you have to go to all-time lows? I mean, you couldn't. It's not possible. Is it? Not possible. We'd have to get down here. That's all-time lows on the NASDAQ. $1963, not the year. That's the price. That's all I've got. That goes back to 2011. Look at the size of the cock-up Trump made. Yeah. Unbelievable, isn't it? Yeah. That's COVID. Let's measure it. Look. The worst possible move we've ever had in history on the NASDAQ. COVID. Destroyed the world. Yeah. Trump getting into power and announcing tariffs. Way worse. And look what happened after COVID. And look where we're off to. And then we went into a bear market for a whole year. It's coming. Unbelievable, isn't it? One man opens his mouth and makes the biggest crash in market history. And do you know what he says? The only thing he said about that crash, I created the biggest day in history. And everyone was like, what? The market rallied by 9.5% when I removed those tariffs. Yeah, but it crashed by 15 when you placed them, you idiot. There go all the Trump supporters. My stream halves in numbers. I don't care. Swiss yen, in short. Oof, good luck. You're brave. That's the worst possible pair to trade against the yen because it's a safe haven. You are trading against world events there, which at the moment is fine unless Trump opens his mouth, obviously. This one, the Swiss yen, will be the one that moves the least out of all yen pairs. If you look at that price action over the last, what we're looking at, 10 days roughly there on the Swiss yen, then you look at all the other yen pairs. Actually, it's not a lot of difference at the moment, is it? That's because we've got nothing going on in the world. But let's scroll out. Yeah. Whoops, not that far. So look at that since May. That's the price action since May. Very nice, orderly price action. Yeah, on the pound yen, euro yen, a little bit more aggressive. Swiss yen, parabolic, doesn't stop because this is a safe haven currency. So if we have World War III kick off or Trump decides to put tariffs on everybody again, you're going to go parabolic on this in the wrong direction. Whereas all the other pairs will allow you out because you get normal market structure. Whereas the Swiss will just go parabolic in one direction. All the other pairs will get pushed and pulled around as their news events come out. The Swiss has no news events. Yeah. Every other currency gets manipulated up and down on news. The Swiss, safe haven, parabolic, one direction or the other, or it doesn't do anything. But it's the cheapest thing to trade, unfortunately. So it's if you want to short something, that's the one. Yeah, because it's cheap. There's a reason. It's always like everyone says, if it's too cheap, it's too good to be true. It usually is. That's $3.60 to short it. Every other yen pair is above 10, $13.60, $14.60, $31.40, $11.50. When it ticks. 23.20. Dangerous. Close to getting out of my oil trade. If it goes beyond that weekly low, I'm off. So you settled good in the new space? Yep. Still haven't done anything to my office. My office is just, you know, when you move into a new house and you have a dumping ground. My office. You can't see all of my office, but this is the only room we haven't properly unpacked in. And it will be the last one to get attention. Everything else is a priority because everybody else lives in every other room of the house. No one ever comes in here. So this is the one that gets done last. Even the garage has got priority over me. I'm getting a door knocked into the garage and getting the garage converted. Even that gets priority over my office. And that's going to take about 6 weeks. Anyway. Just got involved in the pullback on the NAS. Stuck. Not sure that's pulling back. Might do. Just basically last 20 minutes is indecision. There's no directional bias at the moment. So it's a 50-50. You're swimming against the tide, but the tide's got to turn at some point. It will or it won't. It's binary. It'll go up or down. One of those two things guaranteed to happen. In global prime, the Swiss yen, the swaps are at the moment is positive. Yeah, mine are pretty much there positive. Mine are, I think, negative 360. Yeah. So, I mean, that's as positive as it gets usually with Robo. But it's cheaper to short than it is to long. Everything else, it's a lot cheaper to long it. So this is why I got into that trade. This is the reason I took that trade, because it was the cheapest thing to trade the yen. I wanted to get into the yen. It was the cheapest thing. It's just sod's law. As soon as I got into it, all hell broke loose with Israel, Iran, and everything. And the safe haven run started, and I couldn't do anything with it. But this is the danger of trading the Swiss. This is the danger of it. It's a safe haven. So when things go wrong, it will go parabolic. And then when everything goes nice, it will go parabolic the other way. It's just at the moment, we've got massive weakness in the yen kicking in with massive strength in the safe haven run. And as we've got the safe haven run starting to undo, we've also got more weakness coming through in the yen. So what we've actually achieved is a sideways movement when everything else has kind of come down. But I think that might change now the yen's got the deal in place. So one of those things, isn't it? Every pair can do anything at any time. Afternoon, noob. We are looking like we're trying to start a bull run. Not very convincing, but it's certainly the bears are not making any progress. So there's a good chance that we might pull back on this. So what we're doing at the moment on the NASDAQ is we're continuously retesting the initial 5-minute open, which is where we broke through. So we've tried to get back through there 3 times and failed. So I think if we close above there, we'll probably get a swift pullback. If we can get a close above that initial 5-minute range. Obviously the S&P's far surpassed that. But obviously these guys will move in sync. So if that pops, we'll get a pop on this as well. So I'll get break even on that. Dow, it's just stuck dead. It's not going anywhere. There's no news. This is the trouble. There's no news to drive the market today. We've had obviously the home sales, which are ever so slightly negative by 0.7 million. Don't do anything. If I remember correctly, yesterday came out the rumor that Japan PM was resigning after the poor results of the election. The yen got stronger, but soon after denied resigning, and the yen weakened again. Yeah. So that came out this morning. There's the fear and greed today. So we're back up in extreme greed. Yeah. So we should be making new highs. We're not. Market's not that confident. So that was back here. There. So that happened at 7:30 this morning, half an hour before the European Open. So Japan Prime Minister Ishiba, I shared strong sense of crisis with former prime ministers, but did not discuss my resignation at all. So basically, he was chatting with the previous prime ministers, and someone was listening in and went, sounds like he's going to resign. He's having trouble. No, he was just having a chat. So obviously that didn't do anything. That actually it was at 7:30, so it was at 7:30. It was there. So it's there. That's where that news actually was announced. But I think probably in here is where it was heard about. Maybe hit financial juice here, but we're certainly not too bad on strength on the yen at the minute. Okay, pullbacks starting to try and get some traction. Again, NASDAQ inside bar. So lower high, higher low, inside bar indecision. We couldn't break above 5-minute ORB. S&P starting to make headway into propulsion. Dow new high back inside the range. NASDAQ getting hammered back down again. Feels heavy, doesn't it? That Dow is the only thing holding up. This happened the other day, if you remember, on the Dow. I got out the Dow the other day. It was the day before. There. Yeah, we had this situation on the Dow where I was like, this is just getting stuck. It's going absolutely nowhere. And I decided to pull the plug just before it popped. Today, we're the opposite, aren't we? Nice clean break there. But again, the Dow stalled out for quite a long time after the opening range was put in. This is the thing at the moment. We're getting these big explosive moves at the open, but then we run out of steam. We run out of momentum because the market has literally shot all of its capital out at the open and there's nothing left to move. So you just get algorithmic movement where they're just exchanging orders, which means you don't go anywhere. There's no directional bias. Quite normal, but it's frustrating to trade because it takes a long time for the market to get anywhere. Retesting that area again. So we've got 2.5 minutes left on this candle. If we close inside here, I think there's a good chance that might pop the market. See. I call those elevator ride rumors. Yeah. Holy cow. It's hailing. But it's sunny. Weather's gone weird, isn't it? Weather has just gone weird. I bet the washing's out. Again, Dow struggling to make new highs on the 15-minute. See, the downward moves are a lot stronger when they happen. So there is much more interest when the market does get an order in and going bearish. And then we got, 15 minutes of trying to buy it, undone. 15 minutes of trying to buy it, bang. It feels heavy, but not able to go anywhere at the moment. So you just have to sit, wait. It will either go or it won't. If it doesn't go, you don't make money. If it does go, you do. Frustrating morning. It's really raining. So the oil trade, I said I'd give myself 5% on this. It hasn't gone anywhere now for 3 weeks. It's actually more like 4. So this is where we were 4 weeks ago. We have gone absolutely nowhere. So I said I'd give myself 5%. If it doesn't go up again and I don't get out of it and it gets down to 5% drawdown, I'm just going to scrap it. It's annoying because it's oil, and oil always does this to me. It doesn't matter how many times I tell myself don't trade any more oil. I trade it and that happens. I'm not good at it. I need to stop. Might be out of that shortly. Okay, we've broken above on the NASDAQ. So maybe the start of the pullback now. Dow, again, making new highs. So I'm going to stop out on the S&P, break even on the second portion, which brings me back to break even pretty much for the day. Odd close positions anyway. So hoping that propulsion gap holds. It's been very weak, isn't it? Brian closed it at 300 profit. Going to watch. It will probably shoot up now. Hopefully not. Hopefully that is the pullback and it's just a flag break. There's your 15-minute flag. There we go. Nice big sell orders coming in now. Good timing, Brian. I think you just saved yourself a stop loss there. Oil inventories right now. Is it 330? Yeah. For inventories are up, which is bearish oil. Market's not really interested, is it? I mean, it's slightly bearish, that number, but not. I mean, it's a couple of 100 million barrels is nothing, so not really any impact. Oh, sorry, I was looking at the inventories. What was I looking at? Crude Cushing inventories. I was going to say. Yeah, so 389. We got a 319 on a forecast of negative. Okay, so that might be slightly bullish oil. Yeah, there we go. I was looking at the wrong one. So we've got the inventories are down more. So we've got less oil available than we were forecasting, which means we can sell it at a higher price because demand is still there. Supply is short, therefore prices go up. So slightly bullish. Not massively, as you can see, but it's slightly bullish. This thing's going nowhere. It's going to absolutely go either way today. This is just not. It's not got any momentum at the moment. This is one massive flag on the Dow. Look. Just not breaking. Again, same thing on the S&P. Want a good solid break down, and then we'll pop that low. Just doesn't seem to be able to get going today, does it? Nasdaq's gone. So that's about to close out as well. So potential flag break on the Dow, Nasdaq underway. So that good for shorts. So this area here failing, which means we're going to come and test yesterday's low, which is 22,973. There we go. 10:30 EST reversal. Don't believe in it. Could be. Don't know. Some days, other days, no. 50-50. It's funny that one of the first things I remember about you is that you said you don't trade gold and oil because it brings you bad luck. I mostly trade gold now. And since then, it's been going. Yeah. Going really well for you. Yeah. You trade what you're good at. Doesn't matter what you are. Statistics is king. Yeah. So this new website that I've been working on with these guys, they've got a trade analysis tool, an AI analysis system in there, where basically you link your account. So this account here is linked to my account there. So this little EA here is linking data to my account on the web, and I can do an analysis of it. If the analysis, when you do it, says, and AI will tell you this in their website because it all gets analyzed by AI. But if it tells you that gold, you consistently lose money on it, stop trading it. If it says oil, you consistently lose money on it, stop trading it. If yours says that gold, you consistently make money on it, keep trading it. Simple as that. Doesn't matter what the instrument is. If I do that and that and that, these charts could be anything. Could be lean hogs, could be oil, could be a Forex pair, could be a cryptocurrency. It doesn't matter what it is. A symbol is a symbol. You trade a symbol. Every symbol has a unique personality and way that it moves. If you click with a symbol, you trade that symbol. Simple as that. You don't need to know what the symbol is. You don't need to know how it works. You don't need to know why it works. You don't need to know what the time frame is. If you can do something repetitively and keep making money doing it, you do it. That's all there is to trading, is identifying your strengths and your weaknesses by trying different time frames, different strategies, and different symbols until you find something that works. When it works, you do it. But your analysis of your previous trade history is the only way you will find out what works and what doesn't. If you consistently trade certain Forex pairs, like yens, and you constantly lose money trading those yens, when you remove those yens from your portfolio, you'll remove loss. Removing loss increases profit because that loss will not be taken away from your current profit, which means your profit is higher. It's all about identifying the weaknesses and removing them. And then you're left with a small amount of stuff that just works. The less you can trade and the more effectively you can trade it, the better. So, it's just finding what works for you. S&P looking good. Propulsion gap going in on the NASDAQ. Still not convinced. One minute left. Franco, you taught me review biggest losses that way. That always make you crazy. Avoid those pairs and watch the P&L rise. Exactly. Yeah. Exactly what I just said. I didn't even read your comment. Yeah, that's all you do. Find out what works. Do more of that. This is why this AI thing that they've got on this website is brilliant, because what it does is it analyzes your P&L and it looks at all the strengths and weaknesses of everything you do. So it looks at your entire portfolio strength and weaknesses. It looks at time of day strength and weakness. It looks at symbol strength and weakness. It looks at the lot sizes and how you trade. It gives you strengths and weaknesses. And then it looks at every individual FX pair that you trade or every symbol you trade and gives you strengths and weaknesses on those as well. So it's not really a clever report in that it's like, oh my God, that's an absolute guru AI that knows everything about everything. All it is it's just flagging to you what you can't see. So when you look at your portfolio and you see your P&L doing that, unless you break that P&L down into every single instrument so that you can see how every single one is working, you won't know that that's not a good thing to be doing, because that's eating up loads and loads of liquidity that you could be using here. Yeah. And it's like you got stuff that goes down like this. But if you just look at your equity curve as being profitable, but don't spot that there's two instruments that lose you that much money, remove those. That distance there that is the loss gets added onto that distance at the top. This is where this thing's really good. It identifies those and it just tells you in plain English, you should concentrate on closing your trades between 2 and 5 p.m. because at that point you get a 78% strike rate. When you close trades after 6 p.m., your strike rate drops to 40%. That says you're holding on to trades hoping they're going to win. It doesn't tell you that, but that's what's happening. And it's really good in that respect. And it will say, over the last 6 months, you have made a 2.3% loss on gold. You should either stop trading gold or analyze the strategy you're using on gold because it's not working. And it just points it out. And it's like, you look at, I read my report and I was like, you're right. I knew it, but I was like, yeah, you can see it as well. And it just hammers it home and says, like, stop being an idiot. Don't trade oil. Well, the last time you traded oil, you lost 9%. Right now, you're on the verge of losing 5%. That's 14% in a year. Should I be trading oil? No, I know I shouldn't. I shouldn't have taken this trade. However, this wasn't a standard trade, but that's not an excuse, is it? This was a conflict trade because I was expecting the war to kick off. The war was over in a week Yeah, I'm holding on to something for 4 weeks I know is not going to get back up here in the hope that I can get a break even out of it. And I did have a break even on it 2 weeks ago, and I thought this looks like it might go. And then I stupidly held it. But it's one of those things, you still make stupid mistakes. It's not a mistake, it's an opinion. That's all trading is. It's an opinion on whether you think it's going to do a binary move to the up or the downside. I don't know which way gold's going. No one does. If Israel suddenly fire a load of rockets into Iran this afternoon, it's going up there. If nobody fires a rocket for the next 6 weeks, it's probably going to do that. Or it'll just sit here and do this. Who can see the future? None of us. This isn't going, is it? We're still in a flag. What looked like a flag break is now looking like just a fatter flag. It's not able to go, is it? We're stuck. When will the AI coder for MQL be ready? They're having problems with that. I don't know is the honest answer. There's the problem with MQL coding is they're trying to, I think they're trying to actually, personally, I think they're trying to slightly over-engineer it. AI is pretty good at coding anyway. Obviously very good at coding. It's better than all humans. But what they're trying to do is make it easier for people to build EAs and indicators. And that stage of it is working brilliantly. So they've got it to a point where it's done its learning and you give it, I think it's 6 inputs you give it to do with risk, stop, profit, strategy description, inputs, and something else. I can't remember what the other thing is. You give it these inputs and it builds the EA or the indicator out, and it's amazing at it. It occasionally has compile errors because it's not superhuman yet, but it will have compile errors in it because it can't access the MQL compile engine. So what would be brilliant is if MQL said, do you know what, everyone? You can have the compile engine open source. And we'd all go, brilliant. And we'd get it compiling and then fixing its errors before it gave it back to you. But of course they don't do that. So it can't do that because it's not an open source engine. But it's brilliant at creating the initial product. The problem is in the additional changes to the product, in getting it to do the code amendments rather than rewriting the whole thing. So that's where they're slightly struggling. They've got it to a point where it's doing a really good job 90% of the time, but 10% of the time it just is an idiot. And this is what I've always found when I've used AI. You look at it and you go, why did you do that? So you'll ask it something and it will go, you're right. What I'll do is this. And it'll do something and you're like, but we've just spent half an hour doing that. And you were so close and you've just gone back to what we did before that didn't work. And I have said to AI at points, you're an idiot. And it goes, you're right. We're doing it all wrong, aren't we? We've tried this and it didn't work. I'm like, yeah, you've forgotten, haven't you? And this is where the problem lies with AI and large language models. Unless you have the context memory, which is extensive throughout the whole conversation you've had from day one when you started a project, it will lose some of its memory. And it will start to go backtracking on stuff it's done before and it didn't work. You'll remember it because you were in the pain point with it. It won't. And this is the stumbling block they're getting to, I think, with AI. And this is where these huge data centers with large language models being trained specifically is coming in. Unfortunately, most people haven't got access to that sort of technology. So it's really good 90% of the time. And they're trying to crack this last 10%. I think they'll probably get there, but it's just a long-winded thing. It's brilliant, AI, but it's also incredibly stupid sometimes. Even the latest models, they just do stuff, and you just think you're an idiot. And I've sworn at it as well, and it's apologized to me. I'm worried now because I swore at AI. It might come and kill me at some point because it'll remember. But it's getting there anyway. But it's going to be great. even if it's a starting point, simple EA, simple strategy, or knock a strategy up in 5 minutes, an EA up or an indicator. Complex is where it's starting to get difficult, and that's what they want. They want it to be able to build complex EAs, kind of like the stuff I build. It's difficult to get the parts working together. Where coding is great with AI at the moment is if you are building a website, for example, you'll have a CSS file, you'll have a JavaScript file, you'll have HTML files, it'll have server integrations with SQL, you'll have edge functions, all this sort of stuff. And basically your AI sits here and reads it all, understands it all. It knows what everything is there. It knows the impact that has on that has on that, what that has on that, etc. And it puts the whole context together. With MQL, you have one file. And it's just a load of code here. And it seems simple, doesn't it? Really easy just to do this with one instead of 5 or 6 or 100 different pages. But what it seems to miss is the impact that bit of code has on that bit of code. So it changes that bit of code, gives it back to you, and you go, brilliant, that works. And then it breaks that. And you end up going round in slight circles. And I can't work out why for one... literally every expert advisor and indicator is one code, one file. Why it has no problem doing that, but it struggles with this. It just seems that some of the simpler tasks, it's just not getting right. I don't know, but I think they'll get there. Is looking decidedly like this could go absolutely either direction at the moment. The S&P is looking the strongest of the lot at the moment. But this, I think, could go any way today. So I think what I'm going to do is I'm just going to leave it. If we are sitting here in the next half an hour and we still haven't gone anywhere, I'm just going to reduce risk. So I'll drag this stop down and cap it. That's already break even, so I can't lose. I'll drag that down and just take a small loss. So this is either going to go today and it's going to turn into, if these both break and that continues with a runner, it's going to turn into a 2 to 3K day, or it's going to turn into a grand loss. Something like that. It's one of those days where it's just going to go either way, but there's no point. In fact, I wouldn't take a grand loss. It'd be about $600 pound. Still haven't changed this, so yeah, I'm just going to leave those running. Now the Dow is actually starting to make some traction. I don't know, AI trading psychologist, kind of scary. It's not really a psychologist. It's analyzing. It's not psychology. It's not telling you what to do. It's pointing out facts within the analysis. So it's learning best practice or reading best practice and then analyzing what you're doing and pointing out the obvious things. So for new traders or anybody that's been trading for less than a couple of years that's really not done much journaling manually and done manual analysis on their performance, it's going to be great because it's just going to basically go, look at this, you idiot. You trade gold and you lose every time you do it. And you'll be like, yeah, I love trading gold. So I don't care if you love trading gold. You lose. Stop it. That's basically what it's going to say. It's not a psychologist. It's not going to say what you could do is this, what you should do is that. It's going to point out that it will say those things, but not in a coaching way. It's going to point it out and say, these are your best times. You should focus on this. These are the worst symbols you trade. You shouldn't focus on this. It just gives you a bullet point list, if you like, of you'll probably do better if you do this. Give it a go type thing. So, it's not taking over the psychology of trading in any way, shape or form. It's just pointing out stupid things you're doing. Scalped both bottoms of NAS, brain fried. Brian's brain's fried. Brian, break time. Do something nice for yourself. Like drink beer. You know who's been quit? Nirav. Quiet. Nirav. Figured he would jump on the AI footprint, regular candles are junk adverts. I haven't heard from Nirav, but then again, I've got an ad blocker on. So, yeah. Well, if I just type in Nirav, I bet I'm going to get, yeah. Is he in my little list? No, he's not. There's all these people I never watch any content of. Oh, I haven't even got Nirav in there. Look, that's interesting, isn't it? Oh, these people, I just follow people randomly and I absolutely never ever look at any of them. He's not even there, look. Yes, gone quiet. You know why? Everybody's tried it, realised it doesn't work. Off to the next thing. All he was doing was recycling basically market profile. So all he was doing was teaching you how to use market profile. And he was teaching you how to put multiple market profiles together to make one bigger market profile. And then within the market profile, he was telling you how to read footprints, which at best give you a 50-50 chance, like all other candlesticks. So everyone was like, oh, this is an interesting new way to read price action. And then everyone realizes it's the same as everything else. I don't care whether there's more orders here than there is here in this candle. I don't need to look inside the candle. I know that this candle is bullish, and yes, there may be more orders there, and there was more orders there, but I could actually see that if I was using something like Jigsaw anyway. But that doesn't mean that the next candle isn't going to do that. Everybody that saw that candle and that double bottom there and that rejection and then that massive candle thought, hey, this is the biggest bull run we're going to get today. Wrong, because that candle is completely different price action to that candle. So it doesn't matter if you can see inside the candle with a footprint chart. It's got nothing to do with the outcome of the next candle, because the next candle is the next candle, which has got different price action. That tells me that the bulls are certainly not in charge. Which candle do you think is going to come next? What's the odds of it doing that? There's no chart. There's nothing new you can learn in trading. It's binary. It goes up, goes down. That's it. Nothing that's going to predict the future. If you can see inside a candlestick, it doesn't help you predict the future. This is the thing that no one gets, isn't it? Everyone thinks they found a beautiful strategy because this guy on YouTube's been doing it. He's got no idea what the future lies. I haven't got a clue where the future is. I don't know if I'm going to stop out in the S&P or it's going to collapse today. I have no clue. But I do know I've got a risk reward in place that means I'm profitable overall. That's it. That's all you do, isn't it? Nothing more you can do. Lower low going in. No, higher high going in. Which one is it? I don't know. It's one of those, isn't it? It's either a lower low and we're going to do that, or it's a higher high and we're going to do that. There's a 50-50 shot of one of those things happening. Guaranteed, one of those is going to happen. 100%. There is not any way on the planet that we will not break that high or that low today, which means that one of those things with 100% certainty is going to happen. Nirav's candlesticks or his footprint charts cannot tell you which of those outcomes is going to happen. If it could, he wouldn't be selling courses on the internet. He'd be a multimillionaire lying on a beach with an army full of people doing exactly that. He's not. I wouldn't be sitting here either because I've done his course. I'm not a millionaire either. Which is why I know it's a load of rubbish. We're higher high, so we've got divergence across the main indices. We've got lower highs going in on the S&P, higher highs going in on the NASDAQ. Very, very odd price action today. I am not convinced. I could sit here all afternoon and watch it and still not get anywhere. So I think I'll leave it there. So I'm just going to keep these shorts on. The Dow Jones, I will give it until I don't know, maybe 4:15. So another 20 minutes. If the next 20 minutes we haven't gone anywhere, I'll drag that down and I'll take a small loss. In fact, I might actually do that now because there's no point. If this is going to grind up in a flag all day, it's just not going to work, is it? So there's a $300 loss, pound loss there. That's going to stop out a break even probably now, actually. So that'll be gone. There's 800 there. So it's going to end up sort of about 1100 loss day. It'll either go or it's going to be 1100 loss day. So nothing I can do with it. It's not moving. So I will take the loss. My biggest fault, not closing a winner sooner. Agreed. Yeah. I was up, 1,000 odd today, but it's not about being up 1,000. It's about letting the edge play out. The edge is not to take money quickly. The edge is to let the market run. It doesn't want to run. The edge isn't there. You take the losses. The days the edge is there is obvious. The edge is there. The edge is not there. Nothing I can do about that. I can't make the market be an edge. The market is a market. It is either working with explosive breakout strategies or it's not. You don't get a choice. You can't choose, actually, today, could you please explode for me? It's not in your control, is it? The edge is there long term, so you just play the edge. The edge is not there today. Now, in 15 minutes, it could be. In fact, if this gets back up to 1,000, I will probably just shut. If we get back down here again, I will take that. In fact, I'm going to make sure that happens. I'm moving a partial. Just if it closes anywhere down here, I will partial. I'm going to do the same on the DOW. If we get down and we retest down here, I will take a partial. Doesn't look like we're going to. Looks like we're going to stop out. But there's nothing you can do with it, is it? Mathematics is the best approach to trading. Exactly. You don't get into a central bank without a maths degree and an economics degree. Yeah. The only things you need, maths and economics. If you can't do statistics, don't even bother applying. It's all about statistics, mathematics, and edges. Maths is great. It's what makes money. Everything in maths makes money. Every business runs on maths. Yeah. Maths is all about statistics, reports. Yeah, maths. If your business isn't doing well in certain sectors, you stop doing business in those sectors. If you've got products that aren't selling very well, you reduce the price of those products, you tie a new price point. If that doesn't work, you stop selling those products. You replace it with products that sell. Maths, statistics, edge. Same thing. You can't base a business model on pretty patterns. Pretty patterns might work most of the time, but what actually works is statistics. All we've got. Right, I'll leave you there. I'll be back on Friday morning and Friday afternoon as usual. We'll see how we get on with the rest of the week. Tomorrow is the big day, PMIs and interest rates. So tomorrow from 8:15, market opens obviously 8 o'clock. So 8:15, we have our first range of price action coming through, PMIs. Then we've got 9:30, we've got the pound, so that will affect the FTSE. DAX will be obviously the German PMIs. Euro rates are coming out at 115, 145 is press conference. That's when you're really going to get the market move in the FX markets. And then US dollar 245 tomorrow afternoon. So be careful tomorrow. The first 15 minutes, not going to go anywhere. 245, when those numbers come out, that's when we'll go. So be careful trading tomorrow afternoon on the 5, the 10, and the 15-minute opening range. The 15-minute opening range will probably be profitable tomorrow. 5 could get whipsawed. So just be a little careful tomorrow afternoon and also tomorrow morning as well with the DAX. But that's it. Then that's all the news for this week. And then Friday I'll be back. We'll have a look at the inflation figures for Japan, see what's happened to that. And obviously we've got retail for the pound. And then we just trade the indices Friday. See where we go. Stopped out, break even on the S&P. So one profit, one break even, pays for the FTSE loss this morning. Going to stop out on these two by the looks of things. But this might just pull back and collapse. So one of them. Franco, thanks for the classified report. No problem. Don't tell anybody. Thank you very much for that, Franco. Much appreciated for the $5. For the beer. Cha-ching. I wish you could buy a beer for $5 now. Really hard to buy a beer for $5 in the UK. But cans, maybe, at a supermarket. But you go into a pub, $5, no chance. About £4. Some days, if you're on happy hour, maybe you might get a beer for £4. But I'll take it. Any contribution towards beer is even, that's absolutely fine. More than happy with that. Just closed out longs on the NASDAQ, done for the day. Good man, Brian. I think you might be right. So basically, if I've stopped out on my short, it means pretty much 90% guaranteed it's going to collapse in the opposite direction. Bit of nice rejection coming out of propulsion on the NASDAQ as well. We've got some wick rejection coming in at the previous wick rejection on the Dow. So more that sort of thing than collapse today. So we'll see. Anyway, we'll have a look at it on Friday. Have a look at how we got on today. Look at that. Typical. So yeah, anything you need, let me know. I'll be in Discord or Telegram. Other than that, have a good day today and tomorrow, and I will see you on Friday. Have a good one.